Happy Friday, everyone. It's 8 a.m. Chicago time on the 5th of May, Cinco de Mayo, Friday. This is episode number 2463. It is non-farm payroll day, unemployment day in the U.S. It's one of the significant releases, or most important releases in the month. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. First things first, I sent a poll into the YouTube live chat. If you have access to the YouTube live chat, try to answer. I'm trying to gauge what folks are trading the most as your primary product. Be very interested in seeing what that is. I know that the volume in the MNQ has exceeded the volume in the MES. The MNQ seems to be a lot more popular than the MES. And I know that MCL, the micro crude, has been up and coming pretty strong as well. So we wanted to see how much of what folks are trading. Let's take a look at our Convergent Trading pre-market summary sheet. The jobs report came out today. It came in very hot, 253,000 jobs created versus 180,000 expected. The unemployment rate was expected to tick up 10 basis points. Supposed to go to 3.6 from 3.5. 3.5, and it came in at 3.4, so really, really hot. The market didn't know what to do with that, so it was just splashing all over the place this morning as part of the trade. Very tough trade. It looked to me like it wanted to push higher because it held the overnight VWAP in the ES, but it was just a tough hold. So risk-on sentiment across the board. The Russell finally waking up. The Russell up 1.4% risk-on. Cigna Group, Plains All-American, Plains GP Holdings, Warner Brothers Discovery, and many others reported before the market. Please refer to an earnings calendar to see what happened there. I'm just not going to spend time on that. Again, the jobs report came in pretty hot. It offset the revision to March. Is higher than expected. NFP is offset by revision to March. Unemployment lower, average hourly earnings higher. So it's just we're still not moving in the right direction in terms of cooling employment, which is a huge input into inflation. The Chinese cake in services and composite PMIs lower than expected. German factory orders lower than expected. ECB's Villeroy likely to be several more hikes. But we have done the essential. ECB's Visco. Peak interest rates may not be too far away. And then Apple sales and profits topped expectations, but I read that they were weaker than the overall expectation, which is kind of interesting. What's going on here? Weaker than the overall expectations. Expectation. Apple. So earnings came in at $1.52 versus $1.43. I'm not sure what part of it was bearish, but there was a bearish part, maybe not. But on revenue of $94.83 billion, which beat the $92.96 billion expected. So that was big for yesterday afternoon. Today, we're looking at the Baker Hughes rig count at 1 with Fed's Bullard and then U.S. consumer credit at 3, and that wraps up the week. Looking at the S&P multi-distribution profile, it's got a nice double distribution profile this morning on pretty good volume. Now, yesterday we did have really good volume as well, and I talked about this. I said the volume and the range overnight were potentially indicating pretty good action in the overnight session. We got some of that, and we were looking the same way. This morning, the inventory is 100% long, all the entire 43,000 traded above the prior day's close on 36 points of range, and the point of control remains at 40.91. currently, may shift to 4105 soon. But what we've done is we've basically balanced yesterday and are reversing to the upside. So very interesting setup today. Crude had a nice little pop. We look at crude for a minute because there's some really interesting stuff going on there when it comes to the auction price structure. So here's the kind of sort of double bottom gap yesterday. We open right at the top of the range. We make a very small attempt at pushing higher, and it was all sell, 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 sell. Very obvious gap and go. You just had to wait about 20 minutes for that to kind of form yesterday. So sell side only, and the target is that prior low at 40.68, and I had an extended target at about 52. Below that, couldn't get there. But what it ended up doing is that it ended up extending the range down, extending the initial balance down. But from that point on, it was really imbalanced. And so this is kind of interesting because we gapped and moved down. We ended up taking out the prior week's low, the prior month's low in the S&P, no follow through. Like once we took out the prior month's low, we actually had a really strong push higher. We did that twice. We did that in the morning. At about when, just about when the IB was done at about 9:30 Central, 10:30 Eastern. And then we made a run for it again in the afternoon at about 12:13, 12:15 Eastern. And both times it found buyers. And so we took out the monthly, the prior month low, which is pretty significant. Usually we would see a flush kind of follow through. And what it did is it came back and it just balanced the entire day, and we ended up finishing right on top of the point of control. So as I said in my notes this morning in the Convergent chat room, I said that yesterday's action in the ES left us with an indication that sellers may have been exhausted with the session going into balance, and then settlement was right on top of the VPOC or POC. Based on this, I would expect today to make an attempt to the upside. The overnight session has already started on that path. 4100 becoming key, and then 4105, the double bottom right here, is a key resistance area. And the expectation is that if we take this out, which we have in the day session and hold above here, then we are very likely to take out this string of singles from the other day. So that goes up to 4130. So keep an eye on the 30, and then we return to the balance right up here. These 2 days, we'll look at that more closely. So 4130, 4135, 4140 becomes the key target up above 4140 in the ES. So we've already reversed the one-time framing down. So we've been one-time framing down, 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 and we have breached that high after breaching the prior month's low. So to me, this looks like it's an outside-in trade and a reversion back to the 40 area. And then if you look at the volume side, a probable reversion back to 53 from here. This is what it looks like. There's not that much of a push to the downside once the prior month was taken out. So that's kind of that's a key thing to take. Same thing in the NQ. The NQ never really kept its gap open. The NQ was a lot stronger yesterday. Overall, the NQ has been stronger than the ES. The NQ took out its low by just the IB low by just a little bit, and then ended up extending to the upside while finishing right in value. So the NQ clearly starting to make a transition to the upside. And if you recall that 13080 right here is key, and we just basically built a point of control yesterday right on top of that 13080, and we've moved above there 13100, and I'm looking forward to start pushing and cleaning up these single prints above at 13170. I'm expecting a retest of 200 today, 13,200 above. So it's going to be very evident right at the open what the intent is. Since we are opening in the NQ at 13,125, we want to see, does it immediately pull back? But it's got a really good base. This is value goes right to the top from yesterday. It's got a point of control underneath. It's got a lot of support to the downside in that 13,080 area. So any pullback into this region, I'm going to be looking for a long to see it back up through the range. If not, if it dips, if the NQ dips just a little bit and starts to turn up and then holds yesterday's high, then we have a long setup for 13,200. Although the trade looks kind of slow today now that the non-farm payrolls are done. So here's the kind of composite. Let me marry these two. So there's that 37.50 combined. Really, you know, I'm calling this 35 to 40. This is the key target. This is the bullseye for today. We're trading right in here. We're back inside of the prior range. So any dip below and a push above with a pullback is going to find me waiting for a long setup back to the 37.50, 37.50 or 41.40 area in the ES. Okay, that's pretty easy to follow. Essentially, what the market has done is it has digested the non-farm payrolls, which were not non-farm, the FOMC comments from Jerome Powell, and it's not as bad as the market had expected. And it took a day to kind of digest that information, and it's what's clear to me is it has formed a clear inability to continue to push prices lower, which means the sellers moved price low enough to find buyers to balance, and now we're above that balance. That's all I need to know to have an upward bias for today. Really interesting to see here. I want to show you what an excess looks like. This is crude. Crude making some pretty good strides. What's going on with these profiles? Making pretty good strides to the downside. You guys have gone through the crude narrative a couple times. 7,700 is key, very important up here. It broke the 7,700, tested it from below last week, consolidated sideways, and then sold off. And the expectation is it's expected to continue down into 70, into 68. But what's important here, unfortunately, it's loading. I'll come back to it. Maybe we'll have it right here. What's important here is this. Look at this. We had a pretty decent support in the prior RTH session. We come in the next day and we sell off. And what we have, look at this. This is an excess, folks. This is what an excess, EXCESS, excess. Too much of something. This is too much selling going on. And what this did is it blew through a whole bunch of stops or whatever, and it pushed, but there was, look at the profile. You'd have to squint really hard to see the profile below 66.50 in this area. So 66.50, below there was very little participation. It came in the form of bids pulling and no liquidity below there. And you could see that the market very quickly responded to the upside. This was the open in the overnight session a couple days ago or yesterday. And it came right back into line with where it was. Let's see if this is done. There it is, yes. So you can see the day before, pretty balanced. The next day, starts selling off, and then boom, triggers an excess selling spree. and putting in this big spike. So this is an important reference now from 66.50 down. Very important reference to the downside. If we stay above it, there's likely to be a pretty strong pushback up, 75, 77. And then if it breaks down below the 66.50 now, it is very likely to run down this flagpole and retest that very extreme low. Okay? This is what an excess in an auction looks like. This is that proverbial beach ball being pushed underwater, but the pressure from underwater is so high, it popped right up quickly. There was very little participation under there. This is where volume profiling excels, because to everybody else that looks like a candlestick. To us, it looks like a candlestick supported by the fact that there was just very little interest to trade down there, because the volume at price down that wick of that candle was just not present, right? So we expect the market to very quickly move away from this. This is a market that has tested the level and found that there was just no interest down there. So now it can confidently push back up. So I expect crude to base and then move back above into the 75.50 to retest this balance from here, and then move back and check the 77, at which point it would have a local double top at the 77. So crude is very, very likely to rest between the 70 to 75 area for some time. Okay, so really interesting to see that. I mean, it's just a thing of beauty to watch that happen in real time. I don't have it here. I don't have it here because it's RTH only. But crude, you know, it's just 2 balancing days, and then we pop higher on a gap. So the crude is in this big gap, and it's consolidating in a gap. Not seeing a gap and go situation here, but crude is very, very likely done to the downside. That's the conclusion of that. So what are we looking at for today? And QES look the same. This is an RTH only chart. We're opening inside of the 2-day range of Tuesday and Wednesday. The expectation this morning is responsive selling towards yesterday's auction. So responsive selling in here. Pay attention to the high that was put in at 98 and a quarter. It's very likely to be support, and then it pulls back up, and then I'm looking for it to impulse. Ideally, it would impulse up, give me a weak pullback to get long, and then as soon as it does that, now I'm looking for the 35 and then the 40 area right here from about 41, 4110, 4105, something like that. That's the primary scenario. The secondary scenario is it opens, tries to squeeze up, is initiative. We gap up initiative into the 2-day range here, and then it just runs out of steam and starts to break towards into the gap. And if it does, then we're looking for it to move towards value high into the 4090, and then most likely just hold at the double O at the 4100 area for the rest of the session. That's your scenario too. So we end up testing up, testing down, finding a base, and then just sitting in between because it's non-farm payrolls Friday. Things have been priced in. But if buyers step in, then you're looking at 35, 40 as key targets with the magnet and point of control right up here at 53. Okay, so that's really the price map. Any drop below 90, you're looking for a gap to settle trade down at 75. So if scenario 2 doesn't find a base at 90, it's very likely to run to 75 in that case and just, get to unchanged, get to the prior day settlement and base from there. Okay? Does that give you some ideas for today? Just make sure you have a plan. Make sure you understand the map, the price map. Make sure you understand what the market has really respected and tested again and again. That's what these stock zone levels are that are put out by Convergent Trading every day. And then based on that, your job is to just sit and watch the auction and see what's responding to what. And as soon as you see a bias, in other words, as soon as you see strength from one side or the other, then it's just a matter of locating, determining a risk-defined spot to get long or short, and then letting the market do what it does best, which is to decide for you whether it's willing to pay you for your assumptions or not. Good luck. Don't forget to hit the like button. Don't forget to respond to the poll in the live chat about what your main trading product is. I'd like to find out. And again, hit like and subscribe, and then I'll catch you on Monday. Take care.